Question of the week is, do I need to repay my policy loan? And this question has a couple different answers to it. So you want to look at what the insurance company requires and then what you personally need to do yourself. Insurance company requires, policy requires just the interest on the loan. It's always an interest-only loan when you borrow money from your policy. All they require is the interest on the loan. They never require the principal. Now, what you need to look at personally when you take a loan from your policy is, can I afford the interest on this? And can I afford to repay the principal on this at a later date? And that's something very important when you take a loan. Is whatever I'm going to use this money for, is at least going to allow me to pay the interest on the policy? A recent example of this is my brother and I own a fabrication shop, and we had an opportunity to buy a machine shop that was liquidating their equipment. We took $50,000 out of our policies and went and purchased this equipment. We took a loan from our policies because we believed that the equipment in our business would be able to make us more profitable, and we were going to sell off some of the equipment we didn't need, and this was going to allow us to not only cover the interest on the policy loan, but to repay the policy loan principal as well. So we took this loan, we purchased the equipment, we sold off some of the equipment, we've been able to repay the loan and whatever interest was accrued during that portion of the outstanding loan. Now, when you go to take a loan or go to access the cash value in your policy, if it's not going to be if it's whatever you're using the money for is not going to be productive enough to satisfy the interest, much less the principal, then you maybe need to be looking at a withdrawal. So if you're looking at it just for income or for a one-time expense that's not going to help your income go up, or something that you don't believe you're going to have the ability to repay, much less the interest, then you need to be looking at a withdrawal, which is where you surrender a portion of the policy and access that money out of it. But then at the same time, you stop earning a return on the money that you take out of the policy with a withdrawal. So that's a downside. So if you have an outstanding loan and you aren't able to meet the interest or repay the principal on it at this point, then you would be looking at what's called an RPU, where you do a surrender of a portion of the life insurance so that your loan balance goes smaller and you don't have that accruing interest all the time or the outstanding principal. And that's something we can help you do. We can help you look at if you have a question about taking a loan, or is a loan or a withdrawal correct for me, or I have an outstanding loan, I'm having struggles making the payments on it, or any question like that you have, you can always contact our office and we're happy to help you. That's what we're here for. Information to contact us is in the description box of the video.